Hello, my name is Dan Hirschovits. I'm a partner in the Securities and Capital Markets Practice Group here in Paul Hastings' London office.
Hello, my name is James Lansdown. I'm a Senior Associate in the Securities and Capital Markets Practice Group here in Paul Hastings' London office. Welcome to this 4-part video series where we will provide a series of insights for UK commercial companies considering listing on the main market of the London Stock Exchange. In this final video in this series, we highlight several practical steps that can help management teams navigate the IPO process more effectively. As we've explained throughout this series, an IPO on the London Stock Exchange's main market is a complex and demanding process that involves many stakeholders. The first practical step is to develop the equity story as soon as possible. A clear and compelling narrative covering the company's business model, competitive strengths, growth drivers, and long-term ambitions is fundamental. It shapes how investors view the company, influences valuation, and helps ensure the market receives consistent messaging throughout the process. Companies with more complex histories, structures, or governance arrangements should address these topics early with its advisors. Second, financial information needs careful planning. Preparing 3 years of audited historical financials and securing audit sign-off takes time, and determining the KPIs that will matter to investors is equally important. Where acquisitions, carve-outs, or reorganizations affect the financial track record, additional analysis may be needed. Late changes to financial information or unresolved audit issues are common sources of delay, so early planning is crucial. Third, general IPO readiness can significantly improve efficiency. A well-organized data room containing material contracts, licenses, authorizations, and corporate records helps advisors conduct diligence quickly and minimizes bottlenecks. It also helps to address potential issues or roadblocks up front. Companies should also consider whether key customer, supplier, or financing arrangements require consents triggered by the IPO, although ultimately this is a question where your lawyers will advise. Dan.
Thanks, James. Preparing the optimal corporate group structure is another topic that requires early attention. A simple and transparent structure helps investors understand the business more easily. Steps such as establishing a new parent company, simplifying group structures, terminating shareholder agreements, and implementing incentive plans often take longer than expected. Doing this in a tax-efficient manner for existing shareholders and the business going forward is also an important consideration. Governance preparations should also begin early, as there is usually a significant uplift in governance requirements from private company life. Companies may need to appoint independent non-executive directors, establish audit, nomination, and remuneration committees, and update internal policies and controls for a listed company environment. Identifying and bringing non-executive directors on board can take significant time, so early action is important. Finally, companies should prepare more generally for life as a listed entity while executing the IPO. Listed companies operate to faster reporting timetables and stricter disclosure requirements. Finance, compliance, and company secretarial functions must have the capacity and experience to meet these expectations from day one. Early planning, clearly defined processes, and aligned stakeholders are key to a smooth and successful IPO. Getting your lawyers and accountants involved to work with management on pre-IPO readiness will help to address these points. We hope you have found this video useful. If you would like to discuss anything covered in the video, or want to discuss a proposed UK IPO, planning for one, or any other type of capital raising, please feel free to get in touch with us. Thank you for watching.